678 million views, a $300 million title sponsorship, and a league business value now pegged at an eye-popping $18.5 billion. That's more than the GDP of some small countries. The Indian Premier League isn't just smashing sixes on the field, it's rewriting the rules of sports business off it. IPL 2025 has delivered record viewership, blockbuster ad revenues, and franchise brand values that rival NBA and Premier League teams. But here's the real play. Beneath the entertainment, the IPL is emerging as a high-yield, capital-light, and globally scalable investment opportunity. Predictable revenues, low fixed costs, and annuity-style media rights make it one of the most efficient sports monetization machines anywhere in the world. So how should investors think about this? As cricket's format gets shorter, the valuation runway is getting longer. From institutional capital and private equity to sovereign funds and global brands, everyone seems to be wanting a piece of the IPL. And that is exactly what we're going to do today on this episode of the Global Reset. Today we decode Houlihan Lokey's landmark 2025 IPL valuation report with Harsh Talikoti, Director, Financial and Valuation Advisor at the firm. Harsh, welcome to the program. What's driving franchise brand values is the big question. Where is the next leg of growth coming from? And why this just isn't a sport anymore, it's a fast compounding, emotionally sticky entertainment asset class. Harsh, but before I come to you, for our viewers, I want to sort of, bring some of the main points that you've put out in the report. And I think, the numbers will speak for themselves. And there are about 10 of these points I want to make. Number one, the IPL's business value has hit an all-time high of $18.5 billion. That is a near 13% jump over last year. Number two, the IPL brand alone is now worth about $3.9 billion. It's, of course, driven by deeper fan engagement and digital monetization as well. Number three, top teams earn between 650 to 700 crores annually. According to the report, 80% visibility up front. 120 crore salary cap keeps costs in check. High margin, low risk. Number four, $76 million was spent on 182 players in the 2024 mega auction. Rishabh Pant and Shreyas Iyer led the charts with $3 million plus paydays each. Number five, Tata renewed title rights for $300 million till 2028. Associate sponsorships surged 25% on a year-on-year basis to about 1,500 crore rupees. Number six, 1.37 billion views on Jio Hotstar in just 3 days. That's up 35%. TV viewership also rose 14%. IPL's reach is still expanding. Number seven, RCB's maiden title win drew 678 million views on Jio Hotstar, bigger than the India-Pakistan ICC clash. Number eight, RCB tops franchise brand charts at about $269 million. Mumbai Indians and CSK round out the top three. Number nine, Punjab saw the fastest brand value growth in 2025. The Sarpanch Saab campaign and the finals run paid off. And lastly, number 10, Torrent Group, of course, acquired 67% of GT at a $900 million valuation, proof that IPL franchises are serious financial assets. So that's basically a short, maybe not so short, preamble as we get into the discussion with Harsh. All the numbers that I quoted, all the data that I put out, of course, are from the report which Harsh and his colleagues have put together in this very interesting report. Harsh, once again, thank you very much for being with us here on the program. I want to start with the basics, Harsh. I mean, you value, as I said, the business at about $18.5 billion. Could you tell us what are the key revenue drivers going into that very large number?
A great question, Prashant, to start off with. And as you had actually mentioned in the preamble, the major revenue drivers are the media rights, and which has grown significantly ever since the IPL's inception, right? If you look at the first IPL season, which was in 2008, to the next renewal in 2017, and then the follow-on renewal in 2022, it has almost doubled or more than doubled every single time. And media rights itself is the primary driver. And not just in IPL, you look at any global leagues, everywhere you would see that media rights drives majority of your revenues for the league as well as the franchisees which participate in those leagues. So media rights has continued to grow and it's expected to grow in the future as well. And apart from media rights, there are other revenue drivers. One of them being the merchandising revenue, which at this point of time in IPL is very at a nascent stage. With IPL franchisees are been trying to tap into that market, but it has not been that successful in the recent past. But if you look at what's happening in India right now, okay, there has been a growing middle class, an aspirational middle class, which is willing to spend on entertainment, on lifestyle brands, and that means that okay, there is a good amount of jump that you are going to see in the merchandising market or the merchandising revenue for these teams in the near future. That is the second major driver, and obviously the other major drivers are all the team sponsorship revenues that teams are able to generate and gate receipts, which is again a major contributor for teams globally, but not so much in IPL at this stage, because nearly 80% of the revenue largely is derived from the central pool at this point of time, but it is going to evolve just like the other leagues globally.
Uh, got that. So media rights is the big one, right? By far the big one, Harsh?
It is by far the biggest one. So if you look at IPL, right now, 60% of the central pool revenue is largely being contributed by media rights, and it is expected to continue to remain same. If you look at the global leagues as well, recently NBA renewed its media rights, and that has also grown to almost 2.8x over the last cycle. The numbers may look huge, but if you look at it on a CHR basis, even for the IPL, right, the CAGR on some of these media rights deals have been roughly around 20% year over year.
Wow.
So that's not much, especially when there are media reports which says that India's digital media market is expected to grow at 14-15%, and if IPL's media rights expected to grow at 20%, it's not that much on a longer basis.
I mean, 20% seems like a, a decent number to me, but I take your point. Harsh, you mentioned that central pool. Could you tell us how, so these, the fees are collected and then, I mean, how does it work? I mean, how does the model work in terms of how this is distributed, etc.?
Okay, so the distribution happens in two ways. One is when we first talk about the central pool. So this is largely the revenue which IPL or BCCI collects, and the major contributor to that is the media rights revenue that BCCI generates. And second is the title sponsorship revenue, largely Tata and the associate sponsors who also contribute to that kitty. And then the third portion is the franchisee fees that the franchisees generally pay to BCCI. So what happens is the central pool revenue is kind of divided between BCCI and the franchisees. Right now, the ratio is 50-50. 50% stays with BCCI, and the balance 50% is split equally amongst all the 10 franchisees at this point of time. And so typically, as you did mention in the preamble, a lot of IPL teams are making revenues of roughly in the range of 600-650 crores. And a majority of that is largely coming from the media rights and central pool.
In that same proportion, Harsh, in that 60, about 60%, maybe more in case of teams?
For the teams, it's much higher, Prashant,
Okay.
at this stage. It is roughly around 80% of their revenue is largely coming from central pool. And central pool does not include the team's self-generated revenues, which includes the team sponsorships, as well as a merchandising revenue and gate receipts. At this point of time, they largely contribute to 20% of revenue for teams. And in the future, that is one area where teams would look to increase their revenue growth as well.
I mean, that they keep for themselves. And from the central
Absolutely.
pool, it is media rights and title sponsorship. I mean, those are the large two components which get distributed
Yes,
50-50.
absolutely. I think those are the two large pools, but out of which, again, media rights is the biggest, and it continues to be biggest in the near future as well.
In any business, when we speak with companies, we ask them, well, how sustainable are these revenues, right? You say that with regards to the top franchises. I mean, there's 80% revenue visibility even before a ball is bowled, right? How predictable and investable in that sense are these cash flows?
Oh, it's IPL has a unique business model, right? As you mentioned, the revenues are highly predictable. 80% of the revenues every year are kind of guaranteed because most majority of that largely comes from the central pool.
Mm.
And this is something which is very unique because IPL doesn't have a relegation and a promotion,
Yeah.
which most of the other global leagues have. So that means that, okay, the investors who are investing into IPL are guaranteed to get at least 80% of their revenues locked in year over year.
Mm.
And what happens with this is obviously your costs are also controlled because you have a salary cap. Then you don't have to incur huge stadium debt,
Mm.
something which some of the other global leagues or teams operating in other global leagues are required to have because they're required to have their own stadiums.
Mm.
Whereas in IPL, it's BCCI which owns the stadiums, and the IPL franchises are only required to rent those stadiums during the 2 or 3 months in a year around the season, and are required to just pay the rent.
Mm.
And the stadium upkeep is largely being taken care of BCCI and the state cricket associations. So
Mm.
that means your two major cost items that actually ensures that, okay, a lot of teams globally are making losses is not the case with IPL. So that's one of the reasons why you would also see that out of the 10 IPL franchisees, the initial lot of 8 franchisees are making with a good amount of EBITDA margins.
Mm.
So right now, if you look at the initial 8 franchisees, they are all in the range of around 20% plus EBITDA margin,
Mm.
which is kind of unheard of in a sporting ecosystem.
And that is because of this. I mean, they're the stadium, etc. They have to rent it, but they don't have to kind of sort of own the stadiums in that
Yes.
sense. That's very interesting, Harsh, and I think you've nicely broken down the revenue stream for IPL and the teams. Let's take a quick commercial break here. We come back and we'll look at the other side, which is costs for IPL and these teams. How does it compare? Revenue versus costs. Coming right back. Welcome back here on the Global Reset. Today we are doing something very different, what we don't usually do. It's not geopolitics or tariffs or trade. It is IPL, how to value IPL and how to value IPL teams. And to help us do this, we have Harsh Talikoti of Houlihan Lokey. They've come out with this fantastic IPL 2025 valuation report. Harsh, thank you very much for staying with us. We spoke about revenues, where the money comes in. On costs, if you can systematically just tell us which are the big costs.
Okay, so at this point of time for an IPL team, the major cost is the salary cost or the
Okay.
player wages, right?
And there is a cap there.
And again,
Just explain that.
exactly.
Yeah.
Yes. So there is a salary cap.
Mm.
So that means sort of a team, whenever they go into an auction or mega auction,
Mm.
they have a salary purse of roughly around 120 crores at this point of time, and it's expected to grow in the next few years. And maybe again, that is well controlled, right?
Mm.
So unlike global leagues, you look at English Premier League where there is no salary cap,
Mm.
and majority of teams there are making losses largely because of the high player costs, which also includes high transfer fees as well as the player wages.
Mm.
And that is not the case with IPL.
Mm.
So that's one of your major cost drivers. Apart from that, all of the costs are you have to pay 20% of your gate receipts to the stadium to the state associations as part of your for renting out that stadium.
Mm.
And those are the two major costs for the teams. And apart from that, it's all the promotional or marketing expenses that the teams incur.
Sorry, a very, very basic question. That 120 crore salary cap, that is when you make the team, right? And you're not making the team every year.
That's right. Exactly. But you have to pay out, you have to pay the players on an annual basis. For example, if Rishabh Pant has been acquired for 27 crores,
Mm.
every year LSG will have to pay him 27 crores.
Mm.
Or if it's 18 crores for Virat Kohli, at this point of time, RCB has to pay him every year 18 crores.
Mm. So that
So that
120 crores
120
is
crores,
annual cost cap.
that's right.
Okay. And
Yes.
are most teams at that 120 crore limit?
That's the maximum they can go. But again, you have also seen some teams going for smart buys,
Mm.
and they might not fully utilize their
Right.
purse.
How
And
many
some
are at
teams might.
120? How many are at the limit, Harsh?
I think most of them are at limit.
Okay.
because again, a lot of costs also go into acquire Indian players,
Mm,
and your marquee players are required to pay a higher salary,
mm.
and because it's an open bidding process, so that means that uh, your whatever price that you would have had in mind for a specific player, you would in most cases exceed that. So almost all the teams have kind of used their full budget.
Yeah. No, maybe I'm missing some large number here, but you said revenues could be 600 to 700 crores for top teams annual.
That's right. Yes.
On the other side, the cost is about 120, is the limit is 120 crores, right? Uh,
Yes, but apart from that, the other major cost
yeah.
is the franchisee fee, right?
Hmm.
Every team has to pay the franchisee fee.
Okay.
And so right now, the franchisee fee is a portion of profits that the teams are able to generate.
Mm,
And that's the again a major cost. In fact, that is probably the biggest cost outlay for any of the IPL teams.
mm,
A second will be the player cost. But franchisee fee, for example, if you look at LSG, right? LSG acquired RPSG acquired LSG for a outlay of around 7,300 crores. So that means every year they're required to pay 730 crores as a franchisee fee. So that's a major cost that RSPG is required to pay every year to BCCI because they have acquired that team. Similarly, for the initial 8 franchisees, when they were announced for the first 10 years, they were required to pay a fixed franchisee fee. But after that 10-year period, so now these teams are required to pay a portion of their profits as franchisee fee.
okay. So 10% of profits go as franchise fee, Harsh.
It's more than 10%. It's roughly around 20% of your, I think it's 20% of your revenue that will go in as franchisee fee.
I see. So 600 crore revenue, you pay 120 odd crores as franchise fee based on the 20% number. That's how.
Yeah, roughly around that. That's a ballpark number you can look at.
Okay. And what you said about the LSG acquisition, uh, the 10, you said 10% of the acquisition fee has to be paid out.
So what happens is your total acquisition fee is 7,300 crores for
Okay.
a period of 10 years
Mm,
for LSG.
mm.
So RPSG is required to pay 10% of that year over year for a
Okay.
10-year period.
Okay.
So that's a fixed fee because they have been acquired at a specific franchise fee.
Mm,
And after the end of 10-year period,
mm.
what RPSG will be required to pay is again the same thing as what the other 8 teams are doing, which is a portion of their profits or a portion of their revenue to BCCI as the franchisee fee.
Mm.
So
Okay.
there's no fixed outlay.
Got it. Fair enough. Fair enough. But now the owners remain the owners, right? I mean, it's not as if after 10 years all the teams are up in the mix and you can bid for the teams, etc. I mean,
No,
the
it's not. Yeah, I think if you can see the earlier 8 teams, the owners have remained, unless say there's a breach in contract terms, which happened with the Kerala team as well as a couple of other teams, the Pune Warriors a few years back,
Mm.
Fensara and the Kerala Kochi Tuskers actually breached the terms, and BCCI had to terminate those teams, and even Deccan Chargers, right? So in 2009, they breached the terms, and then those teams were reallocated to someone else. If
Got
that
it.
doesn't happen, then it'll remain for perpetuity.
Got it. Now, how does one value these teams? I mean, typically we use a valuation multiple. In the case of IPL, how do you? Could you give us an example?
Absolutely, Prashant. If you look at IPL,
Mm,
so we value using a discounted cash flow approach.
mm,
So where we kind of project the cash flows that IPL is able to generate in the near future.
mm,
And obviously, there will be a lot of math involved in it where we are going to project what will be the next media rights renewal that will take place in 2027,
mm,
as well as the follow on media rights renewal in 2032, which is largely the major driver for our cash flows.
mm,
And then we also project the costs
mm,
that the IPL as a business is going to incur in the near future.
mm,
And then once you have your cash flows built out, then you present value it using an appropriate discount rate,
mm,
and then arrive at your business value. And for the brand valuation, we apply a variant of income approach or discounted cash flow approach, which is known as the relief from royalty method.
Mm,
So the relief from royalty method, uh, under that, you generally rely on a royalty rate. Let's say, for example, if you're supposed to use this brand from a third party, you're supposed to acquire this brand and then use it for your purposes, what might be the royalty rate that somebody is willing to pay to get that brand or for that brand usage? So that is what is the relief from royalty method actually deals with. And we again use a similar cash flows. We largely use a top line from the projected cash flows that we would have built on, and then we apply this royalty rate to arrive at a specific value or the brand value of that particular franchisee after present valuing it.
okay, for the IPL as such, that is that $18.5 billion number. That is that number.
That is the number. That is the number using a discounted cash flow approach at the business value. So we value IPL as a business just like how we would value any other businesses or entities.
But of course, I mean, you can't. There are lots of investors who own shares in individual franchises. I mean,
Absolutely.
many of them are sort of traded in private markets, CSK, etc. Case in point, how does one decide whether something is undervalued, overvalued? I mean, give us some sense, Harsh.
That's again slightly difficult to say, Prashant. I know if you look at most of the valuations that we have seen, right? Uh, for example, Gujarat Titans. When we compare to our valuation, the numbers that we did arrive at, we realized that it's more or less ballpark in the same range. And we also do some back checks. For example, when we value CSK as a business, then we also looked at what is the gray market premium that is being traded at in the private markets, and more or less the ballpark number will be somewhere in the similar range. And if it is not, then we would have to do a further analysis to see why the numbers are different and try to triangulate those numbers and then get to a more reasonable valuations.
While you were preparing this report, you must have spoken to a variety of people, Harsh. Any particular, any are can a individual buy shares in any of the franchises or only a few?
No, I think except for CSK, no other franchisees are up for sale, or there are no stakes available at this point of time,
Yeah.
as you're aware of. And typically, it's very hard to get a buy-in to any of the IPL franchisees.
Mm,
I would say not just IPL. If you look at sports as an asset class, even though globally, right now, the M&A market is not doing that great. But sports as an asset class is something where you are seeing a good amount of uptick in valuations as well as in interest levels. So people are willing to pay that premium to acquire sporting assets. But again, that's largely because you only have a handful of good assets that are available in the public domain, and even though you have a lot of interest from buyers, you don't have that many quality assets available in the market. So that means that, okay, these valuations that you're seeing for most of these IPL franchisees or for any sporting assets globally is expected to grow, and they will only keep growing in the near future.
mm. Do you expect many of these to sort of list at some point? Is there a global experience?
There are a couple of global examples, right? You have the Manchester United, which is listed. Then you have a couple of Bundesliga teams which are listed, but looks unlikely from an IPL standpoint, considering that, okay, it's more like a closed league and very heavily regulated by BCCI. So I'm not sure whether any of the IPL teams are going to list anytime soon, and there'll be a lot of other factors that will also come into play, largely the corporate governance as well as the regulatory aspects, right? Because
Yeah.
before they even consider listing.
Yeah.
So
Uh,
I don't see any of the IPL franchises listing in the near future.
any in terms of earnings growth, Harsh, what should we work with on a? I mean, so for example, there's only one, which is CSK, right? What kind of? But the question is not so much about CSK, but with these teams, can one expect like a 20% kind of year after year growth? Is that reasonable?
That is what it's showing, right? Because again, when you compare IPL, Prashant, vis-a-vis some of the global leagues,
Mm,
right?
mm,
So IPL is probably the newest amongst all of them.
yeah.
So you have something like an NFL, NBA, EPL,
Mm,
which have been playing for over a few decades now,
mm,
and IPL is just an 18-year-old league,
mm,
and yet in such a smaller, in such a shorter time, is being able to generate massive interest, and you are operating out of a massive economy like India,
mm.
which is only growing year over year. So even if the Indian economy is growing at 7-8%, and as I did mention at the start, if the digital media is expected to grow at 18-20%, 15%, then IPL's growth of around 20% looks fairly reasonable.
Harsh, I do in not CSK but others as well. Are there institutional investors in other teams apart from the owners?
Yeah, absolutely. I think there are a couple of precedences. One is obviously the biggest one is the Gujarat Titans, right? When
Yes.
CVC Capital
Yes.
acquired that team in 2022, and they recently exited the majority position, but they still hold the minority position in Gujarat Titans.
Mm.
And apart from that, you have Redbird Capital, which is invested in Rajasthan Royals for some time now. And there is a lot of interest from institutional investors to make an investment into IPL teams. But again, as I did mention, the availability of the assets is far and few.
Well, then when there is scarcity, things go at a high price, at a premium. Really
Absolutely.
enlightening discussion for me, because I mean we all watch the IPL to varying degrees, but as far as the business of IPL is concerned, I think it was an education for me, and I hope for our viewers as well. This is very useful in terms of how to think about the business of IPL. It's a pleasure, Harsh. Thank you for coming on. Appreciate you joining us and running us through this. We'll continue to track the business of sports with you. I hope you do come back on this and sort of other opportunities as you release these fantastic reports. Thanks very much for coming on.
Thanks, Prashant.
Well, that's it on this edition of the Global Reset with me, Prashant Nair. Thanks for watching.